As much as I would like to keep talking about the war in Syria, because we do have new developments today, I'm going to try and take a break for at least one day to go back to something I was talking about last week, and that is the China trade deal that President Trump announced on Friday, because we have a new update on that. As you folks may remember, President Trump announced on Friday that they had come to some sort of agreement with the Chinese, and that not too long ago Americans and the Chinese were at each other's throats, but now it's a love fest. China's our new best friend, and we agree with them on everything. Alas, as we got more details, though, it turns out that Mr. Trump didn't actually have a deal. They had agreed to something, I guess, in principle, that the Chinese would buy more pork, which, doesn't mean a whole lot, and that there wasn't actually anything in writing yet. Which is a nice way of saying that this deal, so-called, can fall apart at any moment. But in fact, that is not really a deal at all. In reality, as we're finding out this morning, all that the agreement that they were able to come to is essentially to have more talks in the future, because even though this was not even nowhere close to being a complete China trade deal, and even if they had signed it and they had something in writing, it was only about pork and soybeans, so not a very huge deal in the context of the entirety of the U.S. and Chinese economies. But they couldn't even get that deal in place. All that the Chinese agreed to with regard to this so-called Phase 1 deal was that they would talk about it more in the future. So that's what they're going to do. They're going to have more talks, and maybe eventually there will be something in writing, and maybe then we'll see if the Chinese will be willing to sign it. Now, I think even I am a little surprised at how inconsequential this so-called deal from Friday ended up being, because I would have thought that it would have been very easy for Trump to convince the Chinese to start importing American pork pretty quickly, considering that China's having that whole problem with that pig illness that's killing so much of their livestock. So it seems, though, that the only thing that's really holding from Friday is that the U.S. will not impose new tariffs in the month of October, which, they were supposed to on schedule with the trade war, ramp up tariffs incrementally every couple of months. There were supposed to be new tariffs this month, and now that's not going to happen. However, Treasury Secretary Steve Mnuchin came out this morning and said that there will be new tariffs in December. If nothing ends up happening and that they don't, reach some kind of a deal to avoid that. So the trade war is not, slowing down by any means. We can't even achieve a ceasefire. Perhaps this is a good thing, though, for the markets, because then it allows, stocks to continue to rally on blind trade talk optimism. Maybe if Trump and Mnuchin can just keep pumping positive headlines, through the news wires over the next year, well, then the algos will make sure that, the stock prices are relatively close to all-time highs at the time of the election. And, of course, it seems as though Fed Chair Powell is becoming a little more accommodative to the president's wishes, because he has announced that they will be doing, what he calls not QE. This is apparently not quantitative easing. They're just expanding the balance sheet by $60 billion a month. And, of course, to do so, they will be buying assets on the secondary market. That's what the Fed does. And so some of you might be thinking, hey, that sounds exactly like QE. And you would be right. In fact, this so-called not QE is bigger than QE1. So I don't know what reason Powell has for calling it not QE. Other than he just doesn't want to say, because then it'll admit to everyone that, hey, this is that thing that was unveiled during the 2008 crisis that had never been done before, and it was only implemented because things were so bad back then. And so maybe people would think, hey, if we're having QE again now, doesn't that mean that we're in really, really bad shape like we were back then? And, of course, the sensible answer would be yes, and Powell doesn't want people to reach that conclusion. So he has to obfuscate and call it not QE. But pretty much everyone who follows this, somewhat closely, all the financial news people, sure, they might call it not QE, but everyone understands that this is QE. Now, interestingly enough, it doesn't seem to have made much of a difference in the markets. You would think that it would have some impact, whether that's to the downside or the upside. Maybe to the downside because by implementing QE, the Fed is signaling that they think that there's something wrong with the economy, and that would lead to a sell-off maybe. But on the same by the same token, a lot of people on Wall Street have been begging for QE and just want more liquidity in the market to try and inflate asset prices, which is a result. If the Fed just buys a bunch of assets, sure, they're going to drive up the price. But things just seem to have stagnated. We've had all this trade talk optimism. Trump saying that they, at least that they came close to having some kind of a deal, and that and the Fed has announced QE4. All this, stimulus going into the market, and they still haven't managed to make new all-time highs. As of the time of recording this, the S&P 500 is still below 3,000. So if they weren't able to make new all-time highs, even after getting the market hyped up on all this hopium, and you heard that right, I combined the word hope and opium. Shout out to Sven Henrik for coining that phrase, I believe. But yeah, it seems like it's taking all the stimulus that the forces of evil can muster just to keep the market levitating where it is, let alone push it any higher. So that would seem to me that without, say, QE4, or without all this trade talk optimism, let's say that the U.S. just flat out lost the trade war, well then I don't think that there's very much holding up this market. We are, as I've been saying for a while, in a very weak position, and I think more people should be a little more aware of that. I shudder at the thought of all the ordinary people who have money stored away in blindly in index funds or ETFs these days, because things seem to have plateaued. I don't see much more upside at this point. I don't know what more stimulus could be thrown at this market to get it much higher. It seems like to me that there's much more significant downside risk, and that people should try and take the win and cash out. But of course, the vast majority of people never do that. And that's why this unnecessary cycle of boom and bust is so problematic for our society. But I don't want to get off on a tangent. So if you get anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.